New data reveals a dramatic shift in the energy relationship between the US and Canada. For nearly 2 decades, Canada was the main electricity exporter to the US until late 2023. Suddenly, US electricity exports to Canada surged by 70%, while Canadian exports dropped by 36%. For several months, the US became a net exporter, a reversal not seen in years. This shift highlights the interconnectedness and vulnerabilities of the North American power system. For Canada, it's a wake-up call about hydropower reliance in a changing climate. The question now, what caused this historic flip, and what comes next? Severe drought upended Canada's power advantage in 2023. Reservoirs dropped to record lows, especially in the West and Quebec, slashing hydropower output. Meanwhile, cheap US natural gas made American electricity more attractive. Canadian provinces began importing US power to fill the gap. The drought exposed Canada's reliance on hydropower and the need for a more resilient, diverse energy system. The Western interconnection, linking Western US states with British Columbia and Alberta, felt the shift most. Drought crippled BC's dams, turning a traditional exporter into a major importer of US electricity. California, once a big buyer of Canadian power, saw its own renewables and hydropower improve, reducing its need for imports. This drop in demand from California hit Canada just as its supply was shrinking. In the East, Quebec's exports to New England and New York also fell sharply due to drought, forcing the province to conserve power for its own citizens. Manitoba and Ontario saw similar, though less dramatic, declines. These regional changes underscore the interconnectedness of the North American grid. Problems in one area ripple across borders. The 2023 drought didn't just affect Canadians, it changed the energy calculus for US states as well. The grid is both a support system and a conduit for transmitting regional problems continent-wide. The events of 2023 stress-tested the system, revealing both its strengths and its vulnerabilities. The lesson regional weather can reshape continental energy flows overnight. Adaptation and flexibility are now essential for grid stability. While Canada faces electricity challenges, its oil sector is making headlines with the Trans Mountain Expansion, or TMX. This project nearly triples the capacity of an existing pipeline, creating a direct link from Alberta's oil sands to the Pacific coast. For Canadian oil producers, TMX is a long-awaited gateway to global markets, especially Asia. For decades, Canadian crude sold at a discount because it was captive to the US market. TMX changes that, allowing producers to reach new buyers and potentially secure higher prices. The pipeline's completion in early 2024 is a pivotal moment for companies like Suncor and Cenovus. With access to tidewater, these firms can load oil onto tankers bound for Asia, boosting revenues and valuations. TMX is about more than economics. It's about sovereignty and strategic positioning. By diversifying its customer base, Canada reduces its dependence on the US and gains leverage in future trade talks. The project is seen as critical national infrastructure, securing the future of a vital industry. TMX marks a major pivot in Canada's energy export strategy, from a continental to a global focus. The opportunities and risks are enormous. TMX is expected to deliver major economic benefits to Canada's oil sector. By providing direct access to the Pacific, Alberta's producers can finally reach fast-growing Asian markets. This breaks their dependence on the US, where bottlenecks and discounts have long hurt profits. TMX should narrow the price gap between Canadian crude and global benchmarks, boosting revenues. Higher prices mean stronger financial health for companies like Suncor, Cenovus, and Canadian Natural Resources. Improved profitability could drive up stock prices and attract new investment. The project is seen as a catalyst for revitalizing Canada's energy sector and supporting thousands of jobs. More revenue for oil companies means more tax and royalty payments for governments. Proponents argue TMX will help secure Canada's economic prosperity for years to come. The stakes for the industry and the country are high. Despite its promise, TMX is one of Canada's most controversial projects. Environmental groups warn of increased oil spill risks and argue that expanding fossil fuel infrastructure undermines climate commitments. The pipeline crosses traditional Indigenous territories, sparking fierce debate over land rights and environmental impacts. While some Indigenous groups support TMX for economic reasons, others remain staunchly opposed. Financially, TMX's success is not guaranteed. Its cost ballooned to over $34 billion, creating fiscal risk for taxpayers. The government's ownership means Canadians bear the risk if returns fall short. Legal and political challenges persist, and the long-term demand for oil is uncertain as the world shifts to cleaner energy. TMX's future is clouded by environmental, social, and financial risks. The project's journey is far from over, and public debate will continue to shape its legacy. Investors and policymakers must weigh the benefits against the risks. TMX is a test case for Canada's energy ambitions in a changing world. For investors, Canada's energy sector offers both opportunity and risk. TMX could mean higher profits for oil sands companies, but the landscape is complex. Risks include volatile oil prices, stricter climate regulations, and growing pressure from environmental and social movements. Diversification is key. Balancing oil sands investments with pipeline, midstream, and renewable energy assets. Canada's renewables sector is growing, offering a hedge against fossil fuel risks. The future value of oil sands companies depends on politics, market forces, and public opinion. TMX provides a pathway to higher valuations, but success is not guaranteed. Investors must weigh short-term gains against long-term challenges like decarbonization. A smart strategy requires careful stock selection and a long-term perspective. The sector's future will be shaped by how well it adapts to global energy shifts. The winners will balance today's promise with tomorrow's realities. Canada's energy sector stands at a crossroads. Its dominance in electricity exports has been shaken by drought and shifting markets, exposing the risks of hydropower reliance. At the same time, the TMX pipeline signals a renewed push for oil exports and economic growth. This creates a fundamental tension. How can Canada be both a climate leader and an expanding oil exporter? Policymakers are trying to balance economic benefits with climate commitments. But criticism comes from all sides. Environmentalists say oil expansion undermines climate progress. The industry resists new regulations. The future of Canada's energy sector will be shaped by navigating these competing interests. Success means managing oil opportunities while meeting environmental responsibilities and Indigenous rights. The recent shifts in electricity and oil trade show Canada's energy superpower status is in flux. Adaptation is key to thriving in this new reality. Canada's energy export shifts are redrawing the North American energy map. The reversal in electricity flows shattered old assumptions and showed how climate events can upend decades of stability. The era of predictable, one-way energy trade may be over, replaced by a more dynamic, interdependent reality. TMX marks Canada's pivot to global oil markets, reducing U.S. leverage and changing continental trade flows. For the U.S., this means less privileged access to Canadian crude and new competition from Asia. These changes will have lasting economic, environmental, and diplomatic impacts. The electricity shift highlights the need for cross-border collaboration on grid modernization and climate adaptation. TMX could create new friction over climate policy and environmental standards. Canada and the U.S. are deeply integrated, but their energy futures are diverging. Canada is navigating vulnerabilities in clean electricity while expanding fossil fuel exports. The future will depend on how both countries manage shared resources and adapt to climate realities. North America's energy landscape is entering a new era, one defined by resilience, adaptation, and change.